Oh, hey, welcome back to your precision data, to your what? To your Excel chart lab studio tonight. As the title suggests, we're going to look at what's called the Loess function in order to in order to analyze stock data. Before we get started, of course, it's time for the introduction. In this video, we're going to explore how to use Loess smoothing inside Excel to analyze stock price data. If you're already comfortable with moving averages but want something more flexible and responsive, Loess offers a powerful way to reveal underlying trends without relying on a fixed time frame. Now, if you're not familiar with what Loess functions are, there's plenty of videos out there to explain it, but the way I thought about it is like this. You're basically taking a series of linear regression lines. You say you 10% a day at a time. You take 10% a day. You plot the linear regression line. You take the next 10% of the data. You plot another regression line. So basically, it's a series of overlapping linear regression, short linear regression lines. Okay, that's the best explanation I could think. Now, in the interest of full disclosure, I will tell you that the Loess function is not part of Excel. But the good news is it is available for free at this site called realstatistics.com, and I'll include the link to where to go to download it. Okay, we download it as you have to come all the way down from here down to this section here. Okay, since we're working with hopefully Excel, hopefully you're working with Excel 2010 or newer. If you're not, it's also available for older versions up here. You just come down here and you just click this, you download the extension, then you install it, and then you have your code ready to go. All right. So let's go back. Let's jump right into this right now. So it consists of actually it's going to be a lot like the Bollinger Bands. By all means, be sure to go. I have another video on Bollinger Bands and MACDs or the VWAPs. So by all means, you're interested in Bollinger Bands and VWAPs, go and check those videos out. Also, there's a playlist for that. I will include a link to this spreadsheet, and also include a link to the real stats site I just showed you a moment ago. Okay, so anyway, we begin with of course these two here is what it shares with the Bollinger Bands. Okay. So let's come over here. Loess requires two things. It requires two columns. And the first column in our case is the price or the date. The second one is the price. Then you come back up here. I think it's either one or two commas. Then you come back up here, then you go and enter a value up here. Let's start with 20, okay? Okay, so that's not right. Yeah, so now we got the 20. So let's take a quick look at the close here with this. So you can see the 20 matches the fit of the actual closing price. Okay, and we can change this value to anything we want to, but generally let's just go to 50. Okay, let's take a look at 50 just so you can see what I'm talking about. Okay, close, insert. So if we were to zoom in on this a little more, I mentioned the stock is IBM. So we did 150. You would see that this is what still follows the trend mostly, but it's a much smoother curve. Okay. So let's and just by way of comparison, I'm also going to set up. So I've already got this already set up. Okay. So I got the average already set up. Okay. So let's take a look. Let's compare the Loess 50 to a 20-day moving average. Okay. Okay. So you can see the 50 is actually pretty close, right? To the moving average, right? Because the red's the moving average. The blue is this. So let's stick with the 50. Okay, let's stick with the 50 because it pretty well matches the. Just change this to 50. Don't forget. Then you come down and you calculate a 21-day average based on the closing price. All right. And again, this is just for comparison. All right. Then we do a standard deviation based on. Okay. I don't think that's right. We'll see what happens. I think we actually want the standard deviation to be based on the Loess price, but we'll see what happens. Okay. And you come over here, then you do this rolling 21 period rolling standard deviation. The S means sample. That means we don't have all the data. We have a partial data set. Now, so technically, you know, our stock prices only represent the current year, so we don't have all the data. So we calculated a rolling standard deviation based on the closing price. We come over here and we multiply the Loess function minus 2 times the standard deviation. All right? And of course, as always, don't be bashful. Stop by the chat session and say hi, all right? Then we come over here and it's the Loess plus 2 times the standard deviation. Okay, so it's pretty simple. Let's just do a quick thing here. Now, the difference between this and the Bollinger Band is instead of multiplying, you simply change. We simply change the first value. We change this to a D, so it'll match the. So it'll match the moving average. But let's just do this. Now it's kind of hard to see what's going on there in it. Okay, so I think we're doing this wrong. I think we actually want to do the standard deviation based on a Loess price, okay? We can look at this, so we come with 150, all right? So as you see, there's still a lot of volatility here. So now let's take a look at our favorite function, our favorite Excel and well, this whole thing here, our favorite Excel and LibreCalc, Office Calc function, which is take. I'll mention here that in Excel to complete a function, you use the tab. All right. In LibreOffice Calc, you use the Enter key. So we come over here now. All right, now we got all our data. And we want the last 100 days. Okay, so this says rows. 100 by itself would be 100 by itself would be the first 100 rows. We want the last 100. Let's see what happens here. Yeah, we want the. Okay, this didn't work. You know why this didn't work again? Dave. They get confused. You only need one comma, all right? So now let's take a look at our closing price, our Loess function, our higher and lower. Insert, recommended. So now we got the price. Now we got the last 100 days worth of data. Okay. Now, here's our Loess function, our Loess value. This doesn't look too bad. Look, actually it's pretty good. Yeah, so this is pretty, our goal was to try to come as close as we could to matching a 21-day moving average, okay? So this is the thing. And this is the Loess value plus 2 times the standard deviation. Okay, the standard deviation. All right? And that's what that represents. Now, I will point out is that, you know, I've searched on YouTube. I cannot find anywhere where the Loess is used as a stock value. Oh, I almost forgot something very important, didn't I? The disclaimer. All right? Let's pause to get our disclaimer in here, as always, okay? So the disclaimer is what? The disclaimer is what? This Excel tutorial video is for educational purposes only. It's not for a financial, investing, or trading advice. Do not use anything you see here to make a trading decision. This is just me kind of just sort of like you know, look. I'm looking for the you know, for the magic bullet here, I guess you might say. But anyway, do not use anything you see here to make financial decisions. Okay. But anyway, if we were to look at this as the same way we looked at, say, a Bollinger Bands, you would say, well, you know, when the value touches the lower value, okay, right? That indicates a possible movement the other direction, a reversal, you might say. So we can consider this to be resistance, okay. Right. No, this to be, we could consider, well, we can't really do that at all. If this is a Bollinger Band, you say, well, it's touched the lower band, therefore it could bounce off there and come back up, and it did. It stayed below the +2 here. All right? It went above the Loess line, but stayed again below the +2 standard deviations and came back down. Now you notice here how it narrows down? You know, this means the market's basically moving sideways. Okay. But when it widens out, that indicates more volatility. So here we came down. Now we could of course change this, you know, to 1.5 or something like that. Why did I choose 2? Well, because that's what the Bollinger Bands uses, okay? So here, it came down, kissed the lower band. We had some downward movement here, touched the -2 standard deviation line, bounced up, touched the upper line. Came down again, touched the -2 standard deviations, and then bounced back up, but it didn't come up as strong. It kind of moved sideways. Okay, and that's basically our. Let's change this to different color. How's that? All right. So let's do this. Let's take this. Let's move this to a dashboard. All right. I also meant, well, let's come over here and do something a little different now. We can come up here now, okay, and we can narrow this down. because this is like this is a lot. This is a it's sort of like an array because it's tied to this. If we change this number here, okay, then our plot updates. Let me come over to 250. Okay, now we got the last 30 days. All right. Now what we can do over here again is, let's move this, so we can move this to it though. Okay. So let's call this underscore. All right. Let's call this we're going to say B lower and B. And again, the difference is we could probably come over here. Let's just try something. Okay, so this is going to be D moving average moving average, right? And the standard deviation is, so this is moving, if this is Loess, TDE, so this should be E, right? Yeah. So it should be D plus 2 times standard deviation. Right. Okay, good. And this should be D and E again. All right. So let's get rid of this. All we have to do to get rid of this is just go here like this, okay? Let's get rid of this. We'll enter a new set of headers. And what we're going to do, we're just going to compare, we're just going to plot the bands, okay? We're not even concerned with anything else besides the bands, all right? So let's come back over here again. Do this. We want to say it's interesting. So it's actually keeping the last one here. This is interesting. Okay, that's fine. Loess. All right. So let's do this now. Let's just plot the date, the Loess lower, the Loess upper. We just want to compare the plots. All right. Okay. Now, to me, that's not too bad. Interesting enough. To me, this isn't actually too bad, is it? Once again, let's do something a little funky. Let's change the L lower to the same color as the L upper, because this should be L upper. So we're going to change this to the same color, which is kind of a rusty orange in it. Let's stick it this way. Okay, good. So this is our lower. Alright. Then we're going to change this. Let's take a look at it up here. Okay, good. Alright. Let's expand this out. So, what is interesting to me is this. This is a Loess functions. The Loess function, as you can see, now to a certain extent, you would expect them to have the same general shape, right? Because we're essentially using the same multiplier, and we're essentially doing the same thing. So is there a value to this? I don't know. Is there a value to this? I'm not really sure, honestly. But anyway, let's do something else. Let's come back over here. Now let's add the Loess lines. Okay. Interesting. So we're able to add the extra columns in. Okay. Over here. Oh, I don't know, 200. Okay. Now this is really hard, to me this is really hard to read. There's just way too many lines here. So anyway, so that is the 20 moving average, all right? This is the Loess function, this is a 50. But let's do something a little funky now. Let's adjust the Loess line to say 20, okay? And of course, this table over here is going to update. Okay, see how it updated? So now we can look over here. Here's a 20-day moving average. All right. Here's the Loess line. Let's just mess around here. Let's just plot these two lines there. Now come. I know someone's out there in the background watching, okay? I know you're out there somewhere. All right? So by all means, stop by the chat and give me a few encouraging words, okay? So we're trying to find the okay, so here's the moving average, and here's the Loess line. Interesting. Okay, this is 20. Suppose we do something like 10. Oh, we're moving in the wrong direction, aren't we? Let's try 30. It works nice here, doesn't it? Let's come over here. This is 100 days. All right. This is 30. Suppose we do 40. So what do you think? It takes some, well, if you look at it, it's interesting. They start at the same spot and end at the same spot. Let's go back over here. So that's too much for the Loess line. Our original value was 20, right? Let's try 30. Yeah, that's not too bad. That's not too. Let's replot this now. Let's replot this. Oh, this has been 25 minutes so far. Let's do this. Let's do close. Let's do Loess. Let's come back and do our comparison again. Well, of course it can. What do you mean it can't be? Okay. Okay. This doesn't actually look too bad to me. They show a similar trend. So this is Loess upper. This is Loess lower. And those aren't bad matches, are they? All right. It seems to be a little higher than the Bollinger Bands, right? This is the lower Bollinger Bands. All right. This is the upper Bollinger Bands. You can see it's a little bit above there. Kind of interesting, huh? Okay. Close. Loess. Like I say, I'll upload this code. The sheet is called RS. I'll change the sheet name to RS Loess Bands, okay? All right. So, let's change this to, oh, I don't know, 350. There we go. All right. So again, so what we do, we put in a buy order here. When it reaches here, we sell. Wait for it to fall again, right? So this is support in one sense in stock trading. This is resistance. When it touches the resistance line, it rebounds some. It touches the resistance line here. Then we touch the support line here, right? And it bounced up a little bit, but again, it moved. Good news is it actually increased in price, but there wasn't a lot of volatility. We got a little volatility here and some volatility here, okay? Then it kind of leveled off, moved sideways. Reached the support line, bounced up a little bit, and moved sideways. What do you think about this? That's not too bad having it up above, is it? Okay. And there you have it, Bollinger Bands and our custom Loess stock analysis chart. Okay. Thanks so much for stopping by. Be sure to stay tuned. I'm gonna be bundling some of these videos up into a course. Okay. But anyway, once again, how to use Loess to try to analyze stock data. Stock data again was IBM. Okay. This is Excel 365. And then once again, I was using the real. I'll give you one more time the name of that site. It's real-statistics.com. I'll include this link in the description along with the link to the spreadsheet. Okay.